Hello, everyone. Welcome to DGens for a Brighter Future. My name is Jorge, and today I'm here with Arnaud Salomon, the CEO of Pelerin. Pelerin is a Swiss fintech provider that allows for the melding of traditional finance and centralized finance. They provide some of the most competitive fees in the world for purchasing Bitcoin, Ethereum, as well as a myriad of other crypto assets, all while doing so without providing KYC. They also offer some amazing products such as their Bridge wallet, which allows you to easily transfer between cryptocurrencies and fiat currencies, as well as their Bridge protocol, which has the innovation of creating different types of security tokens and other assets that can be collateralized and backed on the blockchain. So Arnaud's got a lot on his mind, and I'm excited to pick his brain. He comes from a massive background in finance, as well as working in the energy sector and other commodities. So he brings a lot into the crypto space, and I'm excited to have him here today. How are you doing?
Yeah, hello. Thank you very much for having me.
No, I'm glad that you made the time. It's early in the morning here in Florida, and it's the afternoon over there. So we're having a great time. I got my coffee and I'm ready to go. The first thing I wanted to ask you is I was hoping you could tell us a little bit about yourself. How did you discover the cryptocurrency space, and what brought you into the fold with Pelerin?
Yeah. So originally, I was educated as an engineer. I graduated from the Swiss Federal Institute of Technology with a dominant in IT security. And after that, I decided that I wanted to work in finance and mostly in commodities trading. So at that time, I moved back to Geneva and started to work in that industry. It was basically 2007, 2008, and I was a junior trader on a trade floor. So as you can imagine, that looks very mystical when you're coming from an engineering background. So of course, as an engineer at heart, you want to demystify those things, and you start asking, basic questions and trying to see, how the superstar would answer those. And somehow I got a lot of deception here. That was a very interesting moment because that was, again, 2007, 2008. That's when, we had this very interesting financial crisis. And of course, here, I ended up asking the most basic question, what is money? And then those people would start saying like, half of the answer saying like, it's a medium of exchange and it's this and it's that. And somehow I couldn't understand, why we were using that money. And because of course, money is two things. It's not only a medium of exchange, but it's also a store of value, right? And in that process, I started to ask question, why does it bear an interest rate? Why is it not the market to elect what is the interest rate? And why is it basically chosen by a central planner? Yeah, and I was trying to figure out if actually those traders were actually really understanding that they were not trading with the institution's money, but they were trading on the credit line. And of course, when the cost of money is zero, you have unlimited funding to put on the market. That's exactly what happened in the commodity industry back then. The commodity industry exploded. Yeah, of course, because we had a crisis, a financial crisis, that everybody thought it could become an economical crisis. And of course, at that point in time, when you have a limited amount of capital, you want to allocate that into basic stuff, things that people really need, wheat, corn, energy, clothes like cotton, and that kind of things. Yeah. And that was a very interesting moment at that time. And you could see that there were revolution happening in the world, and mostly due to the cost of food, because in our Western world, the cost of food is mostly the humans, processing the food, but the raw materials in itself are a very small portion of the final price. For some other people in other regions of the world, such as, the Maghreb and the Mashrek, it was a bit different. And when you cannot meet the end, when you cannot feed your family at the end of the year, that's when you revolt. You don't take that kind of risk, like to face an army or anything like that. You have the same dictator for 20 years, but the day you want to go for a revolution is when you cannot feed your family. And that's exactly what happened at that time. So of course, it led me to a lot of readings about the Austrian School of Economics, etc., etc. And I became kind of a gold bug at that time. And for me, the discovery of Bitcoin really happened the first time I met Bitcoin was in 2011. I remember that was a colleague of mine who basically showed it to me, like 2 minutes. Interesting, and next. And I didn't really print it in my mind at that time. Only almost a year later, not even a year, but a very good friend of mine put it in front of me again. And somehow I was already billed immediately. And it became an obsession, of course. And not for the profit, not for the speculation, not for anything like that. It was really because it was a slap in my face, you know, that you could actually create value out of trusts without the need of the central party of trust, you know, without the need of this third party that everybody rely to. And when you understand that you do your first transaction and that you see that you have exchanged value from A to B without any third party being involved in that, and just using maths as a network to prove that the balance are immutable, that's just an amazing experience. And especially at that time in 2012. And that's really how everything started. You know? Sorry, it was a bit of a long intro, but yeah.
No, I think it's fantastic. I think you bring up a lot of interesting subjects, and I love how you went through this journey of learning what money is, going to Austrian economics, becoming a gold bug, finding Bitcoin, and I think most importantly, bringing up the power of having such a powerful system full of trust without having an intermediary that is bound by that trust. So it's a trustless network. And so I guess that's a good segue to get into Met Pelerin. I was curious about what is... for you, what is Met Pelerin? It seems that there are two kinds of companies, in my view. There are companies that are creating problems and therefore creating solutions. And there are companies who find problems and are creating solutions. What is the problem that you find, perhaps in the traditional finance market or in cryptocurrency? And what are you and Met Pelerin doing to solve some of these problems?
Yeah, well, I don't know if we solve all those problems the best way, but we are, of course, going in that direction. That's the goal. No, of course, today, just to make it very, very short, we have basically two lines of business. One is basically the crypto brokerage, very traditional crypto brokerage, and the other one is tokenization. Yeah. And of course, within those two lines, there are like, I would say, kind of three. So for the brokerage, we have two types of service here. We have the very much retail service through the app or through the web. And that's where we try to bring innovation, and we'll discuss it a little bit later. And the very traditional OTC kind of historical business activity for us, where we help mostly crypto rich to cash out in Swiss private banks, in prestigious Swiss private banks. Part or totally. Most of them only cash out a small part of their wealth in those Swiss private banks. But of course, it's important for them to actually have the opportunity to make sure that they are safe in this process, because we've heard a lot of catastrophes. Like people trying to cash out from the SEX, like a centralized exchange, like big amounts, and then money gets stuck in the interbanking system for like months, and sometimes really like 6 months, 8 months, not months, and every bank in the middle wants to have the same explanation and the same proof, and again and again and again, and people are getting super stressed, not seeing their money getting into their own bank account. So that's why we prefer to do the other way around with those clients. We open a very clear bank account with Swiss private banks that do accept this kind of origin of the fund. We make sure the full compliance process is done before initiating any transfer, so that the day the transfer happens, it happens within day, no stress. Everything has been pre-approved by all the parties involved. So that's the kind of historical thing, the retail. And then on the tokenization side, of course, that's where we try to bring something to the ecosystem. I would say it's more a kind of a philanthropic activity, to be honest. So everything is open source. The bridge protocol allows people to basically incorporate rules within the transferability of the tokens. And why would you want that? Is simply because when you incorporate securities into tokens, you need to actually apply the same framework of law that exists for securities. Because again, the token is not a new asset. The token is just a technological vehicle What matters is what you incorporate into. Yeah, if it's a share, if it's a bond, if it's a more complex financial product, structured product. Sometimes you can distribute it only to accredited investors. Sometimes you can distribute it only to some region of the world. Sometimes you have to do this and this and that. So these are the rules that as an issuer, as a security token issuer, you can bind your, what we call a realm. You can create a realm and issue as many tokens as you want, that are backed by real asset, and aggregate the compliance level around that. Yeah. So this is why this is why we created it, because we truly believe that in the future, institutions will be, some institutions, maybe not all, but some institutions like us will be publishing their entire balance sheet on chain in real time, because simply the entire balance sheet can be tokenized. Again, if you think of it, all basically financial assets or contracts, and those contracts can be actually modeled in the form of smart contracts, at least not maybe all of it, but some part of it, which can make the life and automate the life cycle of such an asset in an easier way, and having multiple parties being involved by creating a kind of form of standard. Of course, that's pretty much the idea.
No, there's a lot that I wrote down that I definitely definitely want to touch on. So you mentioned security tokens, and I'm curious. I've noticed that there are some cryptocurrency projects that are focused on maybe replacing, say, the NYDIG or the stock exchanges here in the United States. When it comes to that, my presumption is that this would be a way for people to pull up a ledger and quickly see what the order books look like in a public fashion. Out of curiosity, on your end, when perhaps companies are approaching you to create a token, why would they prefer to have that security tokenized as opposed to having it on some type of stock exchange, or perhaps a traditional method of ownership or purchase?
Well, yeah, that's up to everyone to have their own reason. I mean, of course, most of them, it's because they want to raise funds. The interesting aspect about tokenizing a company today, and especially in Switzerland, is that it's a very straightforward process. It's extremely inexpensive. You can even do it for free, to be honest, because everything is open source. The only thing that you need to do is to add a new article in the bylaw of the company that recognizes this form of shareholders, and have a board resolution to be signed, and that's it. So it's a very easy and straightforward process. So why would you do that? For many reasons, you can blur the line, between the very old school cap table that was managed on Excel mostly, and the stock market. And in the middle, there is something called the private equity market. And somehow here, when you can basically from day one behave as if you were on the stock market without being on it, by having your very traditional cap table that you can, of course, keep part on Excel if you want, and have an open part on the blockchain. You can tokenize everything. That's what we actually advise people to do. You tokenize everything. Even if you sell only part to the public, you can have different shareholder agreements, between the founders, some kind of strategic investors, and the crowd that might have like free transferability, because it's, of course, for the crowd, it has to be freely transferable. And here you're really blurring the lines between the traditional step of every company to go through, like your first very private company, then you go through the private equity process, and then you end up in the stock markets and becoming public. So that's why we believe it's interesting, but not only. Again, since it's tokens are just a programmable vehicle, again, it's not an asset in itself. You can add rules, and again, if you want to have employees that you want to reward them with shares of your company, but of course, when you give them shares, you don't want them to leave the next day. So you want to have a kind of vesting period. Maybe you want to have a cliff, so that you make sure that this person stays long enough in order to get those shares. And you can rethink the way you deal with your cap table fully on chain, and the way you deal also with corporate actions. Like issuing new shares, when you have stock splits, stock merge, when you have payments of dividends that can be done on chain. But of course also off chain. People can choose to be paid via banking wire or via stable coins or even via crypto. And on the other side, that's what we do as a company. You know, whatever we offer is something we test on ourselves first. We were the first company in Switzerland to ever incorporate our shares into tokens and to make it one thing. Yeah. And legally, it's one thing, meaning that you're not only protected by a private contractual agreement, but as a token holder, you're a shareholder. And as such, you're protected by Swiss law. Okay. So this is very important. So people become really fully shareholder when they register with us, and we have the so-called light KYC, because it's not a KYC, it's just a registration process. And here, people become fully shareholder. Yeah, the token is freely transferable, of course. And every year we organize our annual general meeting within the app, yeah, within the wallet. If you own at least one share, you have access to the virtual room where I, as a president, you know, present the whole thing. You can ask questions via desk, and of course you vote on chain based on the amount of shares you own. So basic stuff for governance of a company, like, you know, re-electing the board members and validating the profit or the loss of the company and where it is allocated, etc., etc. Yeah, so very basic stuff for the corporate governance, and everything could be done fully on chain. And that's the beauty. I mean, today we have something like, I don't know, 700-800 shareholders in our company. So of course, every year we do not want to rent a huge room for everybody to be present. So.
Yeah, and I think if I'm understanding you correctly, it seems like this is a really efficient investment vehicle to really allocate venture capital to other companies. And also something I thought that you mentioned that was very interesting is the programmability that can be easily added to these tokens as well. Should new stipulations be added. So if I'm understanding you correctly, it's just a much more efficient way to have assets is to bring them on chain, or at least their
of course,
certificate representations.
Yeah, of course you have to take into account the public also you're facing, of course, because depending on your activity, you know, tokens are still very geeky to manipulate and use today. You know? So that, you know, comes with today still some form of restrictions because of that, because again, you know, wallets, the concept of paying gas for exchanging tokens is still very geeky. So you have to make sure that you are in your correct epoch, I would say. You can compare that industry today to the internet in the 90s. In the 90s, people were still printing all of their emails, you know, they were receiving. So we're still at this phase, I would say. Yeah. So that's why we have more like early adopters today into this technology than the old school industries. Yeah. Of course, everybody wants to, you know, have some kind of look at it, and they are interested in knowing more and this and that. But there are very few actually crossing the steps to actually get there.
Yeah, I guess we're having fun with the experimentation at this stage.
Yeah, but the message here is important, is that again, when you tokenize your company in Switzerland, the tokens and the shares are the same thing, meaning that you're not selling tokens anymore. It's not like going to close doors for VCs because people will be like, oh yeah, but VC do not buy tokens, or that VC do not want tokens. It's not tokens, it's shares, you know. So whether it has a form of Excel, whether it has a form of tokens, it's the same thing. It's just shares. So the VC will buy the same thing, and you can find a lot of easy solution for them to be in custody somewhere else if he doesn't want to take custody of the tokens.
I mean, I think what's cool here too is that the level of accessibility for the share itself, or whatever asset is backed, it can hit a much wider audience globally, because it's easier to access a blockchain than it is to access, you know, say.
That's what we believe. That's what we believe, but that's not what we see today. The problem that we see today in the security token industry is that it tends to consolidate in the form of centralized exchanges, centralized operations, centralized this, centralized that. Yeah. And I understand why, of course, because people want to abstract the complexity of the blockchain, and they tend to create platforms and get broker-dealer license that allows them to become the Binance or are the Kraken of Securities, and they tend to become the whole actor in the process, meaning that the company pay huge fees, and they take care of everything, the legal, the this, the that, the blah, 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 and everything add up to becoming kind of the same thing as of the old world. It's basically the same process, same cost, same this and that. And no one is using the on-chain capabilities, and it's just a closed Web 2 experience. And that's unfortunate, but that's exactly where today most of the I would say the providers are going, because they are receiving the feedback of their clients that it's too complex to raise money from my grandfather or from this or from that. So that's why it's all going centralized now. We feel it's a pity. That's not our way. We continue to focus only on clients that want to have their secondary market on Uniswap, that wants to, do things like that. People that want to have their token listed on the SEX, we don't want to serve them. I mean, they do it on their own.
Interesting. So in the long term, ideally, these tokens can be accessed on decentralized exchanges as well.
Of course.
If I'm understanding you correctly, which I think is
again,
fantastic.
as I'm telling you, a share in Switzerland doesn't need to be whitelisted, and that's also the beauty of it, is that you can say that a tokenized shares, basically the way it works legally speaking is that when you own the token, you actually own the share legally speaking. But in our book, it's in a line that is called dispo mode. Yeah, it's exactly the same within the when you trade the stocks on the stock exchange. The stock exchange do not know every single owner of the stock. There are a lot of proxies in between. And here that's the same thing. You have the dispo mode, and only when the shareholder, meaning the one that owns the share, actually register with us, so he gives his name and his address, then he becomes a full shareholder, meaning he acquires the voting rights and the dividend rights. So if he doesn't register with us, he can own the title, he can own the security, but he cannot have the social rights and the economical rights, voting and dividends. If he wants to have those, he needs to register with us.
I still think that's
you make things very freely transferable and very easy, so that the friction of, it's not even a KYC, it's just a registration process, but this friction only comes later on when you want to actually enjoy your rights.
Well, I think that's also a huge innovation as well, because now you can maintain your pseudonymity that you enjoy on the blockchain, while also having access to the share of any given business on using your product. And I think that's great. And if you want to participate in much more personally, you can do so by registering that asset. And like you mentioned, you can also program these tokens differently. So I assume that there's also the possibility that if someone wanted to use your service, they could use it in such a fashion that you would have to KYC first before you got the token as well.
Of course. And that's why, we have one American client called Realty. It's a very interesting business they do. They tokenize real estate in the US in an interesting way, because basically what they do is that they create an NLC for every property, and they tokenize this LLC. So it's a pure security token. And here they use the bridge protocol simply because they have issued more than 200 properties, and that's exactly why the bridge protocol was created, for multiple issuance, how to manage and to create a realm, and within your own realm you create a framework of law that applies to all your tokens and that aggregates the positions. Let's say tomorrow you want to have an AML trigger, and let's say in Europe is 15,000, above 15,000 K equivalent over a small period of time, then it would trigger, for the institution to actually document the origin of the fund. And that is something you can program and say that, it's not because you have sold 10 tokens that it should multiply by 10 the limit. So you can aggregate all those positions into one single value for the issuer to manage those rules in a proper way. That was really meant for that.
So in many ways, if I was to summarize this in very simple terms, it seems like the goal is, obviously you're running a business, but the goal is long term to see more securities, more assets outside of, say, crypto assets that are on the blockchain that are being traded in a democratized and fair way.
Yeah, that's exactly it. And we as a company, we have the mission to democratize that and to bring open source tools. And of course, we offer some let's say, interesting services on the side that are usually very important for those entrepreneurs, such as how to collect funds, you know, because of course, when you have tokenized your company and you want to start collecting money from the public, if you want to collect crypto, that's fine. You don't have to ask the permission to anyone. If you want to collect fiat on your bank account, then of course, most of the time, if you go and see your banker and say, oh, look, I'm going to receive thousands of wires from all over the world, the banker usually close your account and tell you to bank somewhere else. That's where we step in. We offer escrow accounts where we collect funds in euro, dollar, Swiss franc, and pound on behalf of the clients, and we can consolidate that to one single currency. We can collect crypto as well for him. And that's the kind of financial service where we step in and where we actually do have a business in it. Yeah, all the rest is pure philanthropy.
No, that's amazing. And I got to ask you now, going back to something else you touched on earlier, you mentioned a lot about compliance. I was very curious. When you open the Met Pelerin website, the first thing is that it's notable that you can purchase these cryptocurrencies or these assets without using KYC. And just for the record, I'm not a hater. I'm wearing a Secret Network shirt. I think everybody deserves a layer of privacy. So I was curious, how do you navigate that in 172 countries? And as a follow-up question, what are your thoughts on the travel rule being implemented in the Eurozone?
Okay, so there are two questions here. So our KYC-less service is, of course, limited. We comply strictly with Swiss rules. In Switzerland, we are authorized to process up to 1,000 Swiss franc equivalent per day without KYC, and up to 100K per year. That's already lower than what it is allowed for fiat. You know, in Switzerland, if you walk into a currency exchange, you know, like a physical currency exchange, you want to exchange Swiss franc for euro, it's up to 5,000, you know, per day that you can process there without any form of identification. So there's already, I would say, a kind of discrimination against the technology, you know, which is against. To be honest, it's against the Constitution of Switzerland. You know, so the Constitution of Switzerland says that we have to be technologically neutral, meaning that we should not apply different rules from papers to blockchains. You know, if they serve the same purpose. So here there is a huge debate in Switzerland as to how come the regulator could lower from 5K to 1K only the KYC free transaction. But of course, we're fighting in this direction, but we don't want to, we have to comply. So today that's limited to 1,000 per day, which is already quite cool, because 1,000 per day is cool for people to test without having to dox themselves completely or to give sample of anything, you know. Of course, if they process two banking wires, it's not completely anonymous, yeah, because a banking wire in itself contains what you called the travel rule. You know, when you make a banking wire between two banks, you know who is the sender, and you have, you know, some details of information about the name and the address of the person, so that you internally, you can match it as well to your own clients. Yeah. And that's the same thing that I want to apply to crypto, meaning that when VASP, when virtual asset service provider, wants to exchange from each other, they should apply the same rules as the banks are applying today, which is to transfer the name of the client. Yeah. What do I think about it? I think it's a very, very bad thing. At the end of the day, that's the law. So we comply, meaning that we don't do transfers to any custodian wallet. Yeah. So we do today, the way we comply is by not being custodian anyhow. So we're not a custodian, yeah, of anybody. We offer a wallet. Of course, this is a wallet where we do not have power on it. Yeah? We do not have a copy of the keys or anything. Keys are generated locally, meaning that when you receive your crypto, it's your crypto and it's not us being the custody of it. So here, that's up to anyone to transfer to a CEX or to Centralized exchange or a depository or whatever. But when we deliver the money to them, it's always to a non-custodial address, either through the app that we offer or through their own hardware wallet that they use. You know, they can use a Ledger or Trezor or anything, or whatever wallet they want to use, even MetaMask, blah, blah, we don't care. But we always deliver the money to their own address. And then, of course, from there, they can do anything they want. So that's pretty much I would say the important aspect here. But there is also a second point, is that there was a lot of discussion on Twitter back in the time around AOPP, which is a kind of protocol that serves the travel rules, but not only. You know, AOPP is also a signature protocol that is very interesting to have a standard amongst every wallet provider. And there was a huge debate, and people were confusing this AOPP protocol with the travel rule. I mean, of course, you can use AOPP protocol for the travel rules, but you don't have to. You know, you can use AOPP only for signature standard and things like that. So we believe there was a lot of bad debate around those things, and some companies were suffering a bit around that. But yeah. The DNA of our company is that we are into privacy, even when we do KYC of our clients, because we do for a bigger transaction. We are poppier than the Pope here, but the interesting aspect is that we're working directly with our bank. We don't have like several intermediaries for payments layers and things like that have the information about everyone. Everything remains private. We are under the business secrecy, meaning we cannot share any data with anyone. We do not share basically data with anyone else than the judge. You know, the only person that could actually ask us really information about our clients is the judge coming, saying that we have a mandate for that person. Please give us all the information about that. Yeah. And of course, if we have that, then we will comply, of course. But other than that, we are operating as a very private company under very strict protective privacy laws. And again, we're not a bank, and that's very important because we're not subject to any form of automatic exchange of information that banks do have. Yeah, and that's pretty much it.
I see, and I can appreciate. Excuse me, my English. I can really appreciate the importance of privacy that your company is holding. I also wasn't aware that at no point were you guys a custodian of the assets themselves, which I think is actually very interesting. Speaking of custodian, so one thing I also wanted to ask you, there's this big movement of neobanks that are coming into fruition right now, and it's definitely disrupting the traditional banking system globally. What I wanted to ask you is, what are your thoughts on banking in the future? And also on your website, or not on the website, but on LinkedIn, you talk a little bit about full reserve banking. I was hoping you could dive a little bit into that and tell us more.
Yeah. So I mean, Pelerin is basically a long-term project, yeah. And of course, in the middle, we are building bricks, and of course, trying to monetize those bricks. The long-term vision, of course, is that we want to become a full reserve marketplace and tokenized institution, meaning we want to create a new kind of bank. Yeah. Of course, in the process, the banking structure is not the best because it creates a lot of operational burden. The way we think of it is that there will still be some need for custody on behalf of customers. That's not something we want to do right now, but of course there will be some need for that. But for now, we will really focus on self-custodial, yeah? And we want to bring added value services on top. And that's pretty much what we focus on. Of course, ultimately, and I would say pretty soon, the ultimate goal for us is that you use a wallet just like you would use a neobank app. You know, you have an IBAN, like in Europe, we use the IBAN it's called the IBAN, the bank account. The IBAN in euro, in Swiss franc, in pounds, or even in dollar if you want. And from there you have a card. And what happened is that ultimately when you make a euro wire to your euro IBAN, what you get in return is a stable coin in euro, meaning that you own your own money. No one is having it on your behalf. You are the one who decide. And when you're about to make a payment, of course, you can either send it to an address, like very traditional stablecoin, or you can put an IBAN address, an IBAN, and then we basically you basically redeem that token to us, and we do the basically the interface with the legacy financial world, where we make the payments on SWIFT, SEPA, ACH in the US, or SIP in Switzerland. And that's basically the experience that you're going to have, is that you're going to have a wallet, you're in full control of it, and you can grant an allowance to that wallet to a card so that you can spend as well through cards. And basically the experience is going to be exactly like a bank account, except that you will be fully in control of your own money.
Mm-hmm. Yeah, and I think one of the challenging things to sometimes describe to people that are not as invested, or perhaps just don't know about cryptocurrency, is understanding what the power of being the custodian of your own wealth really means. That nobody can just upend and seize your assets, overnight, or a government can't make you a dissident and then suddenly you don't have access to financial services. I think that a future
and you're talking to someone who has lost it all, and when I mean all, I mean all on the Gox story, and so.
Wow. I guess. Well, I was getting a little into the weeds there for a sec, but now I got to ask you: can you tell us a little bit about your story in Mt. Gox?
No, nothing more. I've never actually used Mt. Gox to buy or sell anything like that on their platform. But at some point in time, I was very stupid, and I was playing some more arbitrage things between Mt. Gox and some others until they froze all the money.
Wow.
So it's nothing that I've ever bought with them or through them or anything like that. It's just that at some point I thought that it was impossible that someone could lose or put 100% of the money online, and that people would be clever enough to only, connect 10% and have 90% in cold wallets, or, I was just stupid. I was really thinking that people would process such a huge thing in a professional way. And that was not the case. 100% of the funds were online. The hole in the bucket was there for years. And yeah, but that's something we discovered years and years later.
Wow. Well, I'm sorry that you had to go through that. That was a painful experience for a lot of people.
It's forging as well a bit the character and the future.
Well, I'm glad it got you motivated to do what you're doing now. So, there's a saying, it's the journey of 1,000 miles starts with one step, right?
Exactly.
So then I wanted to ask you, as a company that created their own wallet for the crypto space, I had to ask you, I was listening to an interview with CZ from Binance yesterday, and he was asked what is the most important aspect to bring on, or what's the most important change that needs to be made in order for mass adoption to occur. And I actually found his answer quite interesting. He said that what he has been focusing on is creating a more seamless experience with crypto wallets. He thinks that is the biggest hurdle for mass adoption. Out of curiosity, do you agree with that statement?
Yes, and that's exactly why. No, but of course, but there are two parts of the answer. But of course, the first part is sleek up the experience and make sure that, and that's why we created also this widget. The widget that we created is basically an online widget that anybody can install on its own website. And the idea is to look at all those projects, decentralized project, DAOs, etc., all those yield protocols and whatever. All those people at some point in time, they want to cash out part of their gains, etc. And this is where it's interesting to have that kind of widget that's permissionless. Anyone can put on their website up to 1K per day, no KYC. People could just, click directly there, having their wallet connected and make a cash out, and that's, where we believe that it's going to be easier if you can have a very easy and straightforward connection from your bank account to your IBAN, to your address, and or the many addresses you use, whatever. But from your bank account to the blockchain back and forth, that's where we believe we have to make the whole feeling very smooth and very intuitive here. So that's the first part, of course. But and I would say here, stable coins are going to be a huge part of the, to help the mass adoption. But what could trigger the mass adoption into crypto? And that's a very different topic, when you speak about crypto, because if you look at Ether or Bitcoin, it's a new asset in itself, and you can even compare it to commodities for some or to money for others. But it's a new thing, there is no issuer. No, or at least not well defined, meaning that it's an open network and everybody can participate. And it's very different from tokens. If you think of it, crypto and tokens are two different animals, because tokens, there is an issuer and it's usually well identified issuer, and somehow you can always trace back to an issuer. And if it's a company, that's easy. Libra, somehow they thought they could market it as a crypto, but it's not. It's a token, so you cannot sell a derivative over FX or whatever to the end bank in Jakarta. That's completely bullshit. But yeah, that's the point. When you try to market something that is not a crypto into crypto, you will face the regulators telling a basket of currency like that is a derivative over FX, and there is some kind of restrictions as to how you can distribute that kind of product, And of course, first of all, you need to have the KYC of each and every participant. And then, of course, when your narrative is to bank the end bank in Jakarta, that obviously doesn't work. So there are, things to be very, very, very clear here. But what could drive the adoption to crypto? Why would people get involved more into Bitcoin and potentially even Ether or some others? But you need to have shit. You need to have the shit to hit the fan really in the real world for people to actually move the existing comfort that they have with the euro and the dollar. People facing double-digit inflation is not even enough, to be honest. If you think of it, people are reporting in Europe like 8% inflation, but it's not. It's most closer to 16 or 15 or something, for the basic stuff, for the things that people really do spend on, Of course, if you include some kind of Sony TV or things like that, price didn't barely move, but that's not people would buy on a monthly basis. So you really need shit. You really need a shit thing to happen so that people really understand the clear value proposition that Bitcoin adds in this world, and that's really the point, I would say. And we're getting there, we're getting closer to it every day. Of course, it's not going to happen overnight, but one day more and more people will realize that they have a tool to opt out pacifically from all their problems, and that's the beauty, of having such a pacific revolution. You don't have to chop off heads. It's not like the former revolutions. You just have to opt out and say, now I'm out of this, and I can remain here on the same land and using something that is unseizable and that is my own property and that no one is to know about.
Yeah. And, I think that we have a very interesting setup globally for that to possibly happen. For lack of a better word, shit hitting the fan. It seems to be. You mentioned that you had an avid interest in gold, in Austrian economics. I wasn't planning to ask you this, but now I feel like I have to after your statement. Do you think that these past few years, possibly since 2008, maybe, have shown the cracks of modern monetary theory? Do you think the Paul Krugmans of the world have any evidence to show the strength behind it anymore?
I mean, this is self-explanatory. The problem is how far can we, pull the string? How, what's the limit until this thing breaks? And that I have no answer here. If you look at what happened in 2008, where basically money became free, it was a very interesting moment because at that time, and then it remains like that, and especially in Europe up until now, yields were negative, real yields. What is very interesting is how could this thing possibly last for so long? How did it happen, by the way? And here it's very interesting to see that some people were expecting that extreme money creation to flow into the real economy somehow. But it did not. It stayed and it remained within the financial world. Yeah. So it created new financial bubbles. Of course, we are at the highest of each and every stock market everywhere in the world, at the highest of the property market, the real estate market, because that's the financial product, that's the only real world economy stuff that people need. That is a very financialized asset. Again, people do not buy a house, people buy a credit, and a credit means how much you can afford per month. So the housing market is completely in sync with the percentage the bank is going to give you, because that's what's going to allow you to have this size or this size. But of course, the size then adapts, the price of the size of this house will adapt to the real capacity of the real markets. And of course, when you decrease the yield up until having negative yields, you distort completely the real estate market, because of course, what was not accessible in the past becomes accessible. So people will edge up the price, of course, and of course, that's a loop that keeps on continuing. And that's why you see now the value of property being completely disconnected to the real economics of people, and now we are seeing a very different scenario. It's been a while, I don't know, this is a personal opinion, that politicians and people around the world do want inflation to step in. They were trying many ways, but this money would never flow to the real economy. So somehow they had to make sure that this money would go to real economy by stopping the economy and injecting a huge amount of cash directly for people not to work, people were receiving money. Companies were being paid to continue paying the salaries of the employees to stay home, and et cetera, et cetera. This is actually a very much economical inflationary event. Yeah. We'll see, to be honest, how this thing could work, because for me now, and I think the US is a different animal than the Europe, but the Europe is a bit trapped because we do not use, our currency is a local currency. It's not a worldwide use currency. Meaning that people that want to buy whatever they want to buy basically in the world, they need to buy dollar first, you want to buy wheat, you want to buy corn, you want to buy anything, it's not only petrol. There's few exceptions like cocoa, because it's like, from the history, it's traded in pound, but other than that, it's all in dollar. In Europe, we don't have such privilege, meaning that the huge amount of debt that has been piled up by states, because it was basically free money up until now. Raising interest rates means bankrupting those states. So that's a real issue today. And again, I don't see how they can solve the inflation crisis in Europe by raising interest rates just like you do in the US, because again, you do that in Europe. You just literally bankrupt 90% of Europe, of the states of Europe. So we'll see how it plays up. We'll see how creative they can be with accounting and money accounting, and how long this can last. But this can last still for quite a long time, to be honest. We'll see. Or maybe we'll have a real war in Europe, and that will wipe out all the problems. But that's a different.
Well, I mean, I'm cautiously optimistic. I've been a fan of stoicism for quite a while, so I try not to be too excited or be too down. But, if your expectations are low, you can only be delighted when they're not as bad as it seems. So take that for what it's worth.
But for me, it's a good event. For me, it's I mean, to be honest, the euro the way the euro works today is a monster, and that doesn't really help much, pretty much individual companies in Europe. So of course, they are trying to be very creative here as to how we can have a single currency with a single rate that could serve the purpose of very different type of economies. So they are trying to make some, long-term yield control curve. They're trying to make this and that, but ultimately, when you mess up with money, it ends up blowing. Yeah, and the question is not if, is when.
No, and unfortunately, in many ways, I agree with you. If they kept the money at such a low rate for so long, eventually by increasing rates, it's going to affect a lot of countries in Europe, like Spain, Italy, especially Greece, and it'll be interesting to see what happens. out of curiosity.
Well, but I would be also cautious here because everybody speaks about the same again. But the big one here is France. The big one here is France. France has a debt to GDP that is actually, I mean, huge. The servicing of the debt is already the second spending, first spending is education, second spending is servicing the debt, meaning, paying the interest, not repaying the debt, paying the interest. Every year they pile up pretty much 1/3 of their budget into new debt. Up until now, it was easy to finance. It was 0%, 0. Blah, 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 something, sometimes even negative. They could be happy. Now, raising rates. How can you roll the previous debt? How can you roll it? And it's not even creating new ones. It's just rolling the past. It's going to be very, very painful.
Oof. Oof, oof, oof. So, answer to the first question, modern monetary theory, that did not work out. So, sorry, gotta have at least a little laugh. I wanted to ask you, so we've seen now that on top of what appears to be European currency debasement, CBDCs have frequently become a talking point within the Eurozone. I wanted your thoughts on CBDCs, and how do you think they're going to affect the marketplace? Do you think that European people will willingly use CBDCs?
No, this is bullshit. No, CBDCs in the first place I highly doubt that there will be any form of CBDCs that will be directed to citizens. That will be mostly used as a settlement layer within institutions or market participants that will still represent the balance of users through a very Web2 type of experience. In no way central banks are going to issue tokens that people could own on their own and this and that. And of course, in no way the central bank is going to play the central KYC by KYCing pretty much every citizen of their country or even the entire Eurozone. That's absolutely, that's a fantasy. So what people call CBDC is basically a kind of global PayPal, that's what they are going into, There's no point of using any form of blockchain here for any government in the world. Again, the blockchain is not it's not a tool that is good for everything. Blockchain is a very bad database. If you put from their perspective, it's a stupidly bad database because it's supposedly it has to be immutable. It's not what they want. It's a very slow database. As you compare to anything you could run on a centralized server, it's extremely slow database. Very hard to make it evolve. That would be a very bad design choice for any central entity, because again, why do you use a Bitcoin in the first place? Not Bitcoin, a blockchain in the first place? Is because you want to try to solve the need of a third party, the need of a central planner, because you want to get rid of those. By being them, why would you use such a basically bad technology? Because the only purpose of that technology is to get rid of them. And again, it's a bad database. Right. It's a bad database. You don't use a bad database for this purpose. You will use a very centralized database that you can evolve very quickly, that you can maintain, that you can scale, that you can this, that you can that, and that over it you have control. You can rewrite history. You can do whatever you want. And that's what they want, because they are the central planners. So they don't want to give up control, of course. So there's no point of using any form of blockchain here. So the way CBDCs could work only would be between approved institutions, or it would be a kind of more of a PayPal design wallet with a central database that could be issued to each and every citizen. Of course, why not? And then they could appoint some kind of banks for being the KYC providers in there. But yeah, we'll see. But I really highly doubt that there will be any form of blockchain used in that kind of event. That's what you see actually in China. In China, what they have issued is not a token on a blockchain or anything like that. It's a purely centralized project.
I mean, what I've read in China is that they've had a hard time getting the entire country onboarded onto the CBDC system. And I think that there's still a lot of skepticism. And even though, obviously we see the benefit of having something of value that is intangible that can't be taken away from you, there's still a huge market of people that just want to remain in cash or in a physical dollar. And for me, I see the CBDC as at least in its idea, as problematic, that every single person can be traced, every transaction can be traced, or someone, or in theory, say a central bank could control how much you can be debited, how much you can save, what you can spend your CBDC on. And for a country like China that wants to have so much social constraints on its people, this is a powerful tool. And it's honestly very disappointing that we're seeing Europe and even in the United States, like people trying to propose these tools that, in my view, are just very totalitarian. Now, that is just my opinion, but I would hope that we see like some type of U-turn in the future, and perhaps that U-turn is what you described, shit hitting the fan, and that may need to happen for people to wake up and realize the importance of being their own custodian. But I can only guess. Who knows, right?
I totally agree with you. Today, they won't give up that power, and creating such a tool, even if at the genesis of the tool, it's the narrative around it is very nice, and it's full of promises as to, we represent the free world, and as such, we will never do bad things, but we should need to have a backdoor anyway, because you never know. And just by having that backdoor, you never know, that, ultimately, even if the promises at the beginning were good, ultimately, the bad guys will get in it. It's always the same thing. And that's always the same thing with every situation of power. The power, attract degrees and attracts, and the power corrupts. And as we say, power corrupt, absolute power corrupt, absolutely. I mean, of course, the more you have the power and the more you're tempted to use it. So the good idea here is to make sure that from Genesis, you do not have such power, that you guarantee those by, native protocols and this, but this won't happen, or this won't happen.
I think also that's another caveat in the idea of modern monetary theory, right? Is that there's an entity that can add more money into the system. I think what people get confused with a lot, though, is that just because you're creating more money does not mean you're creating more value. You can take a pizza with 8 slices and cut it into 32 slices, but that doesn't mean you have more pizza.
Yeah, that's kind of less true if you look at it in 3D, because when you look at the pizza, you look at 2 dimensions. But if you look at it in a 3 dimension with the pyramid scheme, and what happened is that the central bank is the tap on top, so the first one to spend is still spending on the old value, and therefore he's creating wealth for himself. The one in the middle is getting net, and the one at the very bottom is getting screwed. So that's why this thing exists. It's not meant to be equal. It's meant to actually be able to direct where the money flow should go and who gets to enrich himself and who's not.
I think that was an incredible, phenomenal discussion about the economic system that is currently running the world at the moment and some of the issues that are following it. I wanted to ask you, what are your thoughts on Ethereum moving to proof of stake? What is your current take on that? And also, the next question I wanted to ask you, do you think that we're going to start seeing challenges with censorship in proof of stake networks going forward, or at least in Ethereum?
I have no crystal ball, but of course, proof of stake do create such potentiality. Maybe just to give a little bit of a way back. When I first heard of Ethereum, I didn't take part of the ICO. At that time, there was a lot of noise around the way it was fully pre-mined. It was a very new way to do this thing, of course, because before that, blockchains would just being created, and from day one, it would be an open network for anyone to transact and participate as a miner or as anyone. And here they created this new thing called ICO, where they pre-mine the whole thing. And then after that, they opened it and they made a sale. Even during this sale process, they invented, the kind of steps, like if you are creating FOMO, if you're not early enough, then you pay double price, then you pay double price, or, the price is increasing somehow over time. So you have to get in rush to buy it at the... So for me, at this very beginning, I was extremely interested with the value proposition of Ether, bringing smart contracts, even though this is not really the correct wording I would use. It's more like a scripting, because it's neither smart nor a contract, but at least it brings some form of Turing complete scripting on the blockchain. So that was a very interesting thing. But I was a bit concerned about the governance in general at least at the beginning. Simply because I was too much looking at the coin itself, Ether. If you look at Ethereum as a platform, what they've managed to build is amazing. It's wonderful. It's, I would say, I wouldn't go one step further. It's game changing, really. They are it's creating a sandbox for everyone to recreate finance, and that's absolutely beautiful. Now, having said that, we're still in the sandbox, so we should be very careful, and that's why it's very interesting to have those two giants like Bitcoin and Ether with two very different value proposition and philosophy behind, because it allows to have a pillar like Bitcoin and then having this sandbox like Ether to test new things and to create and to go faster and to make, potentially new things. Potentially it could break, but as well, potentially it could, be the new revolution of everything. So this is very interesting. Now, speaking about the move from the proof of work to proof of stake, obviously there is a huge concern about the validators. Validators ultimately are going to be the big centralized exchange. Why so? Because, well, they have 70% of the amount of Ether. When they will be able to withdraw, because of course today it would be too risky for the centralized exchange to lock the Ethers from their customers because they cannot withdraw from now. They can only propose the service as a service, just like, taking a small fees for doing it for them. But at least they can, because they have this basically asset liability problem. Of course, if people want to withdraw their Ethers, they need to be able to do so. But when you will be able to withdraw from the staking process, potentially everything will be concentrated as to like the few exchanges like Binance, Kraken, and all those, simply because they will be able to monetize their deposits in a risk-free way. Meaning that somehow, if you end up only with the 10 biggest exchange controlling 80% of the validation nodes, and forcing for, OFAC or any entities like that, and forcing to them to use this program instead of that one, or to use this node instead of this one because it has a kind of blacklist, already built in, or it's going to be a lot easier because those entities are already kind of speaking on a daily basis, maybe not on a daily basis, but very regularly to the regulators and to the officials, etc. So it's going to be almost impossible for those actors to refuse if it's becoming the actual norm that the state wants to impose. So there is a risk, of course. There is a potential as well that people will fly away from the SEX and it will, faster the transition to self custody, etc. Maybe we'll see. But of course, that proof of stake do create this risk. Yeah, it's a lot easier for the agencies, enforcement agencies, to target the 10 guys that are already discussing with them and to tell them to use that software instead of that one because it already has embedded blacklist. We'll see. That, of course, no one has a crystal ball. No one knows how it's going to play, but the risk is there.
Yeah, I think we are in a very precarious situation right now. Um, the sanctioning of Tornado Cash by the U.S. Treasury, and then I believe it's the Netherlands or the Dutch. Not sure. Netherlands. Yes, the Netherlands. They arrested a developer who had been working on Tornado Cash, and it sets this weird precedent where
I wouldn't
people
agree
can get
with
in
that.
trouble for making
I
code.
wouldn't agree with that. The real question here, and that's where I have no answer, maybe you do, is whether this guy was only the coder. Yeah. So he has received a
Mm-hmm.
mandate from someone, he was paid to produce code, and then someone else was operating it. Or was he the creator, the operator, and did he profit from it? And profit meaning
Mm.
not by just selling his time to someone else, like producing code, but profiting from it because he's running it. Yeah, and the more he has traffic, the more he earns. And if it appears to be so, it's going to be very hard to argue, but I was just producing code. No, you were not. You were actually maintaining, operating, earning fees, and promoting somehow. Yeah. So then, of course, is my personal opinion is that is right? No, of course not. It's not right. Everybody has the right for privacy, and of course, the main issue is where you have the trigger. You know, where is it on the line? You know, where if you have like 80% of black money being recycled and 20 money for privacy, or if it's the other way around. Yeah, and that's always
Mm-hmm.
where it's becoming tricky to be maximalist on those topics with the existing framework of laws, because framework of laws are not meant this way. They are meant as to tell you that pretty much we're business friendly until you screw up. Yeah? And again, where do you put this? I'm screwing up, or I'm screwing up here, you know, and that's why you see in the car industry and all those things people are becoming extremely they take a lot of precautions all the time, because the way the cursor is slightly above the acceptable threshold, then that's when things becomes harder, so you can admit that you have a little bit of fraud or a little bit of bad things happening, but you have to make sure, and you have to prove to your regulators and to everyone that you're making everything you can as to keep it as low as possible, and you're not on the opposite promoting
Mm-hmm.
do whatever you want and reprocess all the bad stuff here and blah 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 and blah. So the thin line here is very different from because again, at the end of the day, you're not going to win. Some people have the right for violence against you, and you don't have that power in return, right? So if they decide that that's the way it works, for you, there is no two ways. Either you stop or you go on the run and you do it from somewhere else, hiding somewhere else. But it's not like you can run a real business like that. Yeah? So again, we'll see how it plays. But that again is a very different. It's a very difficult topic to defend today in front of regulators if you have the threshold at 80% fraud and 20% that was just for anonymity and for good use of anonymity.
Yeah, I understand that for sure. And I didn't think about the arrest of that individual in that fashion before. I do think I am kind of hopeful that, at least in the US, for the most part, there is a precedent set that a code is considered free speech. And currently, Coinbase is spearheading a class action lawsuit against the Treasury to hopefully change this sanction or perhaps modify it. Not sure how that's going to work out.
Good.
And there's always the risk that maybe they lose that case, and now the precedent is that code is not free speech. So I mean, it'll be interesting to see, but I'm cautiously optimistic. But it's good to at least see that there's some people out there still fighting for our privacy.
Yeah.
If we don't control our money, we don't really have any freedom in the first place. It's the illusion of freedom, if you will. So before I end this conversation with you, I wanted to ask you, for any of the viewers that are watching, we're in the middle of a bear market and things seem really droll and difficult. What would you say to anyone who's new to the space, or even a veteran in this particular moment? Maybe not financial advice, because that's not what we provide here, but where do you see the space going, and maybe what can we do to be prepared for it?
No, I mean, I like to give a financial advice, but a reasonable financial advice, which is for people to, if they don't know anything about this space, just do DCA, and buy, very little amounts every week or every month, when you receive your paycheck, just put the money that you will not miss. Just consider it as spent, not as an investment, and like you will live a very good life. And then one day you will wake up with, a very good surprise. So if you have the habit to go like, I don't know, 5 times a month to the restaurant, just, cut it to 4 and put that money into Bitcoin every month. But again, consider it as spent. That would, I think, be a very reasonable advice. On the other side, how to get those people to get into the space? As I said at the beginning, for me, that's the stablecoin business. Stablecoin has the beauty of being very easy to understand. If they are well done, you can even abstract the notion of gas, which is good. If you can get away from, even if with the Polygon or Gnosis chain or those layer 2. You could say that it doesn't really matter, but of course it does a little bit, because it creates an extra step that you need to buy this gas and understand a bit that's what the concept of gas, etc. So this, I guess, are the first step. And then once you're from there, once you have a wallet that is able to connect, your traditional dollar to on-chain dollars, and then with those on-chain dollars, you have access to the whole DeFi new world. That's when you will, take the time to learn, because it's a pretty important learning curve. When you want to go fully on-chain, interact with, buy your coins directly on DEXs instead of centralized exchanges. When you want to actually lend a little bit of your money on Aave. When you want to maybe buy a realty token house because there is a 10% yield on it. It's based on US property. Interesting. I want to do that. There is a learning curve here. But the learning curve comes when you already have the tools in hand. So when you have stable coins, at least it's something very easy to understand. And then here you're connected as well. So you will be able to do DCA if you want on a very decentralized way, but you will also be able to participate in new kind of economies and try to educate yourself about finance, about how things work, what is the type of orders, what type of things. There are so many things to learn, and there are so many interesting projects, popping up, like people really recreating a traditional finance, with having the junior, senior trenches on bonds. And there are like super interesting things that you can build in terms of portfolio here. And yeah, that's pretty much it.
Well, hey, Arnaud, thank you so much for taking the time coming onto the show. If you enjoyed this content, like and subscribe, share this with your friends and family if you think it's valuable to them. And I will be putting all the information for Met Pelerin, the Twitter account, the LinkedIn, and also the information for Arnaud, so you can follow him on Twitter. Thank you guys so much for watching, and thank you so much for your time. I really do appreciate it.
Thank you.
Hey everyone, thank you so much for watching. If you enjoyed that content, please like and subscribe below. You can also check out our affiliate link with Mexi Global, which is one of the world's largest crypto exchanges with some of the most incredibly low fees. And you can also check out some of our other content if you want to get some serious brain bombs, like this interview I did with Claire Zhang, the head of marketing over at Stratos Network, which provides a decentralized blockchain solution for the cloud. Or you can check out this interview I did with Alexandru Lupascu from Omnia. He's the co-founder, and we discussed how Omnia provides off-chain privacy that makes it easier and safer to access Web3. Anyways, thank you so much for watching, and degen safely.